This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
Welcome back to TradeFlow TV. Markets move fast, and if you're not ahead, you're under. It's Wednesday, August 5th, 2026. Physical constraints are multiplying across every major sector. We're seeing a logistical crisis in the U.S. heartland and a panicked tech sector. Let's get you caught up. First up, the 60-second commodities flash. A Mississippi River bottleneck is triggering a shipping crisis as the U.S. heat dome causes logistics to break down. Extreme heat has dropped water levels to critical lows. Barge operators are slashing cargo weights by 25% just to avoid grounding in shallow channels. The cost to ship grains skyrocketed, sending soybean futures near $1,185 US. This is a global food security threat that markets are finally pricing in. Meanwhile, silver clears the $60 hurdle. Spot silver has pushed past $60.50 this morning as industrial demand explodes. A major AI hardware manufacturer is delaying guidance because they cannot secure enough physical silver paste. This is the physical limit of the AI revolution. Copper inventory is plunging. LME copper is trading near $14,650 per ton after a catastrophic synchronized drawdown in warehouse inventories. Finally, Brent crude continues its relentless grind higher, trading at $86.40 a barrel as refiners starve for feedstocks. Diesel crack spreads are widening violently as the market prices in a refined product shortage that could trigger a global logistics freeze. Let's deep dive into why Mississippi water levels guarantee a food price spike and how metal deficits are stalling the AI infrastructure boom. You cannot fix physical scarcity with monetary policy. The Federal Reserve cannot print rain, they cannot print copper, and they cannot print logistics. Look at the Mississippi Chokepoint. The heat dome isn't just destroying yields, it's creating a logistical nightmare for the central artery of U.S. exports. Barges are carrying 25% less weight to avoid grounding. This requires more fuel and more vessels to move the same amount of grain to terminals. This friction creates a massive spike in freight costs. The cost to physically move those calories has just doubled, locking in an Agflation loop through year-end. This locks in structurally elevated prices for U.S. corn and soy. International buyers are now facing a reality where calories are much harder to secure. Silicon Valley is hitting a physical wall. Silver and copper markets are now trading on sheer industrial panic as AI growth hits physical limits. You cannot build a gigawatt AI facility without miles of copper wiring and massive amounts of physical silver. That growth curve just hit a brick wall. With silver crossing $60, big tech is now bypassing futures exchanges and bidding up unrefined ore directly from miners to secure supply. If you hold paper tech equities reliant on cheap manufacturing, you are exposed. Physical metal miners now own the toll booth to the digital future. Brent crude at $86.40 is a brutal tax on the supply chain, but the real story is the refined product shortage suffocating Europe. With crude stuck on tankers taking the long way around Africa, coastal refineries are running out of raw material for diesel and jet fuel. Aviation and shipping demand is highly inelastic. This is causing crack spreads to blow out, meaning the cost of moving goods globally is about to spike. A localized diesel shortage in Western Europe will translate to higher trucking costs and a structural drag on the entire European industrial engine. Here is the TradeFlow take. Physical deficits are multiplying. The Mississippi River bottleneck proves that climate anomalies and agricultural inflation are now permanently intertwined. Do not short the silver and copper breakout. Industrial panic buying is price insensitive. Maintain your defensive positioning and keep your energy hedges locked. Stay liquid, stay sharp. Head over to TradeFlow TV to stay synchronized with physical realities. Have a defensive Wednesday, and we will see you tomorrow.
That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.